that there's a one big change, Harsha, which has happened. That one big change is the RBI has pivoted from a tightening to a very loosening is not the right word, to a very benign kind of a regime. How will that change life for NBFCs? How will that change life for MFIs? How will that change life for banks? And do they become a buy now?
Nikunj, clearly large cap banks is something that we have been liking for quite some time. And as you rightly mentioned, I think the regulatory concerns that were there in terms of some of the tightening of the rules, etc., have started to ease a bit. We are also likely to see better liquidity conditions going forward. And also globally, with yields coming off, there is some support for Indian interest rates also to go down. So, given all of this, I think it's going to benefit some of the lenders gradually. However, from a valuation perspective, we still prefer large banks over NBFCs. In case of NBFCs, we are betting on diversified businesses rather than single vertical businesses because some of these single vertical businesses have higher level of risk at this point of time. For example, MFI. So that's what we are avoiding at this point of time, but keeping our bets on some of the large banks as well as NBFCs, which are diversified in nature.
Okay. There are a couple of themes within financials which also are worth revisiting. One is insurance. Second is this entire capital market play. Third is, wealth managers. What else do you like in this space, which is largely termed under the financial bracket, but also is a very separate niche category? But there are also separate niche categories.
Within the other segment of banking and financials, we prefer some of the capital market intermediaries, although valuations remain high, and we have seen some bit of correction here. But we do believe that from a medium-term perspective, there is a long runway for growth. And that's what excites us. As far as insurance is concerned, clearly the growth is not so exciting at this point of time. And also we are expecting some regulatory headwinds to evolve over a period of time. So to that extent, we have been betting on banks rather than insurance plays at this point of time.
Okay. So Harsha, just to recap the setting on the table, markets are looking oversold, so 5-7% bounce here or there could come. But barring that, we should not expect a great 2025. I mean, can I say that?
I think large caps can still offer reasonable returns over a period of next 1 year is what we think. Because the earnings trajectory seems decent at low double-digit kind of earnings growth expected. If there is no dent to that expectation, I think large caps over a period of time should give reasonable returns. And also what's happening on the crude side is definitely positive for Indian corporates. With a lag, we should see some benefits flowing into margins, and that should help overall earnings growth as well. So overall, we are not so negative on large caps at this point of time. There could be a period of consolidation, but eventually, I think markets will follow earnings growth, and that's where we believe there will be at least low double-digit kind of earnings over the next year.
All right. Harsha, I remember when the last time we interacted, you were not sounding that bullish on the auto space particularly. And now that we are seeing almost a 50% correction in most of these major OEMs, do you believe that this is a space where do you once again have the valuation comfort, the growth picture looks attractive, and are you changing your stance within the auto space or still believe that it could underperform?
Valuations have definitely got reset. To that extent, there is a little more comfort on the valuations. However, from a very short-term perspective, we are unlikely to see any great change in terms of the demand trajectory. Most of the segments have been seeing muted growth in terms of volumes, and also there is a reasonable inventory that has built up in the pipeline. So to that extent, next couple of quarters are very unlikely to throw up major improvements in terms of the trend that we have seen. So to that extent, again, just like most of the other segments of the market, it could be a phase of consolidation even for auto stocks in general.
If you like this video, then like, share and subscribe to ET Now.